Tuesday, December 9th. Market analysis, Stan Ehrlich. Getting over my cold, so that's an improvement. That's good. I usually start out with stock market indexes. I go to futures and some stocks. Well, we've got sort of, in general, another down day, but not very much, that's for sure. A point, half a point, MES, not even below yesterday's lows. And yesterday, I repeat, was the first day we've seen lower lows for over a week and lower closes. So, my comment was, is that the beginning of the break? Remember, I've been looking for a head and shoulder top, but that didn't pan out because the shoulder went too high and it took too long. And it's been a week and a half now since I thought that might happen. Didn't. Double top is still a possibility. You don't have to have these highs extremely close to each other, and I'm referring to the top that occurred on December 30th. As long as it's pretty close, and that's a matter of opinion, isn't it? This is kind of close, but I still think it's topping out no matter what you call it. We're not overbought. That's not giving me any help. I'm still looking for the break into a few days before Christmas. That begins the Santa Claus rally. Buy 1/3, 3 trading days before Christmas, and Christmas is on Thursday this year. So that would be Monday. And what the heck's the date? The date's going to be the 22nd of December, Monday. Buy 1/3 of whatever you're buying. S&P, E-mini, NASDAQ, or give or take, going to be similar results. Buy 1/3 of your position. The next trading day, Tuesday next week, or not next week, but the 21st, I guess. And the day before Christmas, Wednesday, a couple of weeks from now, the last third. Hold on. The bad part about this strategy is that I am unaware of any particular protective stop loss orders. You're just supposed to, and I do not agree with this philosophy at all, hold on to the trade until the beginning of January. In the first business day of January, sell 1/3. On the second business day of January, sell 1/3. And on the third business day of January, sell 1/3. Get out totally. But a caveat to this, or another concept, would be don't just sell out. Put a very, very tight trailing sell stop so that if the market were to keep moving up in your favor for a while on that day, it might make you more money. Otherwise, you're giving away a slight bit of profit if it's a profit to begin with. Excuse me about my cough. S&P, I think is topping out. Indexes, I think, are topping out. It's a variation, excuse me, of a head and shoulder and a double top combination. There's no name for it per se that fits perfectly. 1 minute chart, MES, dropping off late in the day, pretty good. Almost making new lows for the day. Well, actually, it did by a very slight bit. Okay, down only 36 in the spider. MES has dropped off more since then, since the regular 1 o'clock California time close, but a lower close. Second day, lower close. But it's a doji like the MES. So we'll see. I'm still looking for lower levels. Didn't get overbought, but all of them came so-so, not super close to overbought, but they came up, around my overbought 75. They came up in the high 60s and 70s. Next, low 70s. 1 minute, spider. Late in the day, made its lows. QQQ managed to hang on to a very small close gain and the 1 minute chart. Looks like it actually barely closed lower, not higher, sorry, but not much. Around unchanged. On the NQ, we're down just very slightly. Basically a doji. The lows for yesterday held again today, give or take a tick or two. And that's awful close to last Friday as well. So it's really not making any downside progress to speak of. 1 minute chart. Basically, a lot of sideways. YM definitely hitting the dust, dropping off a chunk. New low and closing below previous lows for the last 3 days. This is a new low close for the last 4 days, and it is the weakest of the indexes, acting the best, coming down the quickest and the most so far. I would call this, again, I'm afraid I can't come up with, it's not very good for a head and shoulder top. You might average the time for these two highs. That would get you to about the right point in time. But the shoulder price is a lot higher than one would expect. The first shoulder high was in the ballpark of 46,918. So things don't match up very well. But I've seen probably thousands of these over my 53 years, and most of those years in the industry have been technically involved. So YM 1 minute chart dropping off, new lows. Next, Russell still stalling out at about the same price for 4 days in a row. The closing prices aren't going up and down much. This was an outside trading range, I believe, by just a few ticks either way, above and below. But it's so mild. I'm still looking for a top. Major resistance. And here you've got the 1 minute Russell for the last 2.5 days. Sorry. Next, bonds head and shoulder top, which broke out on Friday and dropped a lot yesterday, came back very little today, not doing much. I like what I see. I don't have a problem with this bounce. And I said yesterday it could bounce because it got oversold yesterday. It's still oversold. I think we could see a new low for the move easily by the end of this week, closing below 15 easily. Yeah. Below today's low and below yesterday's low as well, probably. 10-year notes have just broken out today, first time. Well, you can see that they closed just a squeak below the neckline yesterday, a few ticks. So it's construed as a breakout, but obviously not the usual, which is a large volume day, sometimes a gap across the necklines, and a big price movement day. Oh, doggone. But that's not what happened completely yesterday. Today, closed near its lows, dropped off a good sized chunk, and almost all the range was below the neckline. So that's totally convincing. We're supposed to be going down now to 110.16. Next, slipping off on crude oil, got to resistance, stopped, no overbought, just simply the resistance, stopped the rally, dropped off quite a bit yesterday and a little bit more today. I am looking for a test of at least 57.12 and probably 55.80, and I'm not going to rule out below that easily. Next, natural gas. Dropped a bit yesterday after being overbought for the first time on Friday and dropped off another sizable chunk today, already coming down close to the first support level at 4.413, down to a little lower, 4.290, 4.3. And then the real support doesn't start until we get down a little under 4. That's where I think we're going. Next, heating oil is trying to break a line that I alluded to being a potential neckline. Now, that would be the shoulder high October 10th. I'm sorry, that would be 10/29 of this year. The cursor's on it right now. That's the head, obviously the highest high always, or maybe a little double top. You can average the prices, but that's basically it. And the last shoulder high was just on last Friday. Timing looks good. Price levels look very adequate. Nothing is really wrong except the shoulders are not very pronounced. But the body parts are there. The neckline is broken almost today. Came down, tested it, closed at it. We'll see what happens tomorrow. If you got a real head and shoulder top, it should drop a lot very quickly and not go back up above the neckline. Next, gold. Overbought conditions, same resistance area tested 3 times and slipping off just a little bit. Not much. But look at what happened to silver. Shot through the roof again. Overbought again. Now we've got divergence, new high in price, but not a new high in the indicator. Excuse me, people. Sorry about that. Watch out. I don't trust this. I wouldn't be buying up here. It is frustrating. Tell me about it. To see a market move in a direction you thought it might move in, which I didn't, and be missing out on a profitable opportunity you thought you could have taken advantage of. Don't run after markets. You almost always ending up the rally, buying the rally high or selling short on the break, bottom of the break. Don't do it. Difficult to resist. So I'm looking for a top. Platinum. My bearish engulfing on Thursday of last week did not work. Today we got higher than that high. Thursday last week closed above it, coming up, but we're now, for the first time in a few days, overbought again. I still think platinum's trying to top out, but I'm disappointed in my signals lately. Next, we have a nice break out of overbought conditions in copper. So I'm now looking for a move back down to the same trading range we had before, which is just a little bit lower than today's low. Let's call it a start at about 520.26 and support at the bottom of the range in the ballpark of a little under 5. Next, now we're oversold in a support area and soybeans coming straight down from a breakout of a head and shoulder top on Thursday of last week. Friday, big time down, 100% of the range below the neckline. Monday, big time down. And today, another sizable break, but finally getting oversold and in support. So this is very much ready for a little bounce. Wouldn't be surprised, excuse me, to see it up to 1110. Hard to say exactly how much it would bounce up to, but a modest, small, and soon to make new lows, if not tomorrow. Slipping off a little more in soybean oil, no pun intended, and has a double top potentially. I've been talking about that for a week. We don't break out of the double top and get started on the downside until you get below 49.79 on a closing basis. Then you've got a downside objective of 46.90. Next, we're coming down almost to the minimum downside objective on the head and shoulder top, which broke out only a week ago in soybean meal. This has worked outstandingly perfect. A textbook example of how head and shoulders could, should, and this one has. It's almost finished completely. So I think it might close at objective tick under 300 tomorrow or real soon. Next, corn, a little stronger, still at resistance. Trying to do some damage to my head and shoulder top idea, but I think I've seen a lot better of these formations, so I'm not super encouraged this is going to work out. I really got to see a close first below 441.5. Then we'll start talking about going down to the neckline, which I've drawn in, and then we're going to start going down to the potential downside objective, which I'm going to shift over the downside objective marker, which is going to be around 410. Next, support still holding wheat, but its closing prices seem to be drifting off slowly, and the highs have been drifting down as well. The lows are in a real tight cluster of price range. Wow, 1, 2, 3, 4, 5, 6, 7 lows at 532 down to 30-ish. And there's only 1, 2, 3 other closes that weren't quite so low. That's what, 8, 9, 10 days, somewhere in there. Next, Apple, sideways. Basically a doji, still looking for lower levels, was overbought, starting to come down. It is at support. So yesterday it bounced a little. Today it's steady. Still looking for gaps to close at lower levels. Tesla rallied a little. The gap was closed today. How about that? Told you about this yesterday. The low was on Friday, 451.66. Today's high is 452.39. Obviously above the low of last Friday, when the high was yesterday did not get high enough at 449.75 to close the gap that is closed again at 51.66. Done. Closed. Perfect example of gaps being closed. And you know something else? If you had sold short at the gap closure, the high of the gap, the low of Friday, you would have almost sold short at the high of today, and it would have closed with a small profit. Well, if you sold the high, that's a given. You're going to close with some sort of profit. But that's great. That's a perfect example. Next, NVIDIA, Doji inside at a little bit of resistance, closing slightly above it. I am looking for this to roll back down. Not too sure. And AMD, outside trading range with a slightly higher close implies strength, but this whole last couple of months, October, November, looks like it's trying to top out for a little bit bigger break. Remember, we've got a very large gap to finally close at 171 and a few ticks. What is that exact price? 170.68, a little below 171. That's when the gap is closed. Yeah, I got it about right. So bearish. Next, back to E-mini. You guys have a great day and profitable trading to you.